What if I told you that you could earn $200,000 working remotely and pay $0 in income tax completely legally? No offshore schemes, no hiding money, no sketchy accountants. Just you, a laptop, and the right address. Thousands of Americans are doing it right now, and by the end of this video, you'll know exactly how to do it too. I'm Brad with Evolution Expats. I've been helping Americans relocate internationally for over 10 years, and I'm a permanent resident of Panama, one of the best territorial tax countries on the planet. Today, I'm going to show you exactly how to combine territorial taxation with the foreign earned income tax exclusion to legally eliminate your income tax burden. This isn't theory. This is what I do and what hundreds of my clients are doing right now. Stay tuned because I'm going to show you the exact calculation that gets you to zero tax, compare Panama versus Paraguay for Americans specifically, and reveal the document strategy that you need to start right now, even if you're not ready to move right away. Before we dive in, hit that subscribe button and the bell. You know the drill. Tax laws are changing fast, residency programs are getting more expensive, and countries are closing down windows of opportunity constantly. I'll keep you informed with firsthand expert analysis. Now, let's talk about the American tax problem. You already know this, but let's say it out loud. The United States is one of only 2 countries in the entire world that taxes based on citizenship instead of residence. You are hunted globally. Move to France, the IRS wants their cut. Move to Thailand, the IRS wants their cut. Move to the moon, the IRS will figure out a way to tax you there too. This is not common. A British citizen moves to Panama and breaks UK tax residence, done, zero tax. A German moves to Costa Rica, no more German taxes. But Americans, we're special. And by special, I mean stuck with a 1913 tax code that assumes you might be a robber baron hiding gold in Switzerland. Even if you move to Panama, a country that charges zero tax on foreign income, guess what? The IRS still expects their Form 1040 every April. This is the American tax problem in a nutshell. Why does this matter now? Remote work has exploded. You can do your job from literally anywhere. But most Americans are still sitting in high-tax states paying 40 to 50% combined federal and state tax when they could legally be paying zero. That's not tax planning. That's just not knowing the rules of the game. Here's where it gets exciting. Territorial tax countries only tax income earned within their borders. It's that simple. It's beautiful. It's elegant. Let me show you how this works with real numbers. Let's say you're a software developer. You work remotely for a US company. You earn $120,000 per year and you move to Panama. Your US company pays you, the money hits your account. Panama looks at this and says, that income was earned from a US company for US clients, not our income, zero tax. You pay Panama $0. You pay the US? We'll get to that in a second. The big territorial tax players in Latin America for Americans are Panama, the most developed dollarized economy with a massive expat community, and Paraguay, the hidden gem, dirt cheap, simple residency. Costa Rica, beautiful, but a bit pricey. They've been territorial since 1946. Nicaragua is super affordable. The infrastructure is a little bit rough. And then Guatemala, only 7% tax even on local income, the lowest in the region. And there are some modified systems as well. Uruguay offers a 10-year tax holiday on foreign income. The Dominican Republic has a 3-year tax holiday, which means you don't owe taxes for 10 years and 3 years respectively. But here's the crucial part for Americans. Moving to Panama alone doesn't solve your problem because of citizenship-based taxation. You need layer 2. Enter the foreign earned income exclusion. This is the IRS's one gift to Americans abroad. If you qualify, you can exclude up to $130,000 of foreign earned income from US federal taxes. That's the 2025 amount. This amount adjusts annually for inflation, so it goes up most years. Quick disclaimer here, I'm not your CPA or tax attorney. This video is educational, not personalized tax advice. Tax situations vary widely based on your income type, state, and family situations, as well as dozens of other factors. You absolutely need to work with qualified tax professionals who specialize in expat taxation before making any moves. What I'm showing you is how the strategy works in general. Your specific situation may differ. 2 ways to qualify for the foreign earned income exclusion. Option 1, the physical presence test. This is the one that most people use. Be outside the US for 330 days out of any 365-day period. It doesn't have to be consecutive. Every day counts. Option 2, the bona fide residence test. Establish a bona fide residence in another country for a full tax year. Harder to prove? and more subjective. It requires demonstrating real ties to your new country. Let's do the math with our Panama example. You earn $120,000. Panama territorial tax is $0 because it's foreign-sourced income. The U.S. tax before the tax exclusion, let's say, is $25,000. After the exclusion, you subtract $130,000, then that leaves you with a taxable U.S. income of $0. That's right, total tax paid, $0. This is why Panama works so perfectly. You get Panama's territorial tax system working in your favor locally, plus the foreign earned income tax exclusion is working in your favor with the United States. It's a 1-2 punch that knocks out your entire tax bill. Now, if you earn more than the foreign earned income tax exclusion limit, and remember it's $130,000 for 2025 and will likely increase in future years, you owe U.S. tax on anything above that threshold. But you're still coming out way on top. And there are additional exclusions for housing costs that can push this even higher. What counts as foreign earned income? W-2 wages from a foreign employer, self-employment income earned abroad, contract work performed abroad. What doesn't count? Passive income like dividends, interest, capital gains, rental income, and pension distributions. So now you've solved federal, you've solved for your new country, but some US states are clingy ex-girlfriends who refuse to accept that it's over. The worst offenders? California will hunt you down like a bounty hunter. Virginia is aggressive about domicile. New Mexico assumes you're still a resident unless proven otherwise. South Carolina maintains you're a resident if you intend to return. This is where your Panama residency card becomes critical evidence. You need to break state domicile with a checklist. So what you need to start with is you need to get foreign residency in Panama, Paraguay, or wherever, close or move US bank accounts, cancel your US driver's license, get a foreign one, sell or rent out any US property, and move your stuff and document it with receipts. Cancel your gym membership, country clubs, anything that you have that ties you to a particular domicile. Register to vote abroad if possible. File a final state tax return explicitly stating that you have moved. When you get your Panama residency card, that becomes evidence number 1 in your file. When you open a Panamanian bank account, that's evidence number 2. You're building an ironclad paper trail that shows California, I'm gone, accept it. Your passport stamps are also part of this evidence. Entry stamps, exit stamps, and visas. These prove where you were and when. Critically, never throw away expired passports. They're a documented record of your physical presence worldwide. If you're audited by your home state years later, pull out those expired passports and show them exactly where you were. I have a detailed video on this strategy that I'll link in the description. The point is, you're not just leaving. You're proving that your life has changed and that you have relocated permanently. That's the difference between success and getting a tax bill 3 years later. Now, here's what nobody else tells you. The time to start preparing your documents is right now. Not when you're ready to move, not when you book your flight, now. And after this quick paperwork preparation portion, I'll go over some real-world scenarios with territorial tax countries that you will want to consider. So when you're considering your move abroad and your options, these are the documents that virtually every country will want. Panama, Paraguay, Costa Rica, anywhere on the planet, no matter which program you choose. They all have slightly different requirements, but having these documents on hand takes care of most of your paperwork worries. First, your birth certificate. Get 3 to 5 certified copies from your state, not the hospital souvenir, the state-issued certified copy with the fancy paper. It's only valid for one government process, so you'll need to have a couple of extra copies if you have multiple applications that you'll be applying for. Second, your marriage certificate if you're married. Same deal, 3 to 5 certified copies, state-issued, on the fancy paper. Third, your FBI background check. Most countries require this. It takes 4 to 6 weeks minimum and must be recent, usually within 6 months of your application. Now here's a term that can confuse people, the apostille. An apostille is an international certification that makes your US documents valid in other countries under the Hague Convention. Most Latin American countries require this. Get apostilles from your Secretary of State for documents issued by the state or the US State Department for federal documents. It costs $15 to $50 per document typically. Budget 2 to 4 weeks in your timeline. However, many states offer same-day processing with an appointment. Check your Secretary of State's website for the specifics. Now, I've seen people lose slots because they didn't have an apostille birth certificate ready when their appointment came up. These windows don't stay open forever. So start gathering your paperwork now, get them apostilled, and have them ready in a folder. You'll already be 60% of the way there when it's time to move. So, Where can you go and what can you do to take advantage of territorial tax programs? Let me break down your two best options as an American looking for territorial taxation. First, Panama, the most developed option. Why Americans love it? It's a dollarized economy, no currency risks, no conversion. First-class world infrastructure, massive English-speaking expat communities, and world-class healthcare. There are direct flights from the United States. Miami is only 2.5 hours away, and they have a strong banking system as well as political stability. The residency path would be through the Friendly Nations visa, although requirements have tightened. There is also a self-sponsorship option that we could discuss. Investment options like real estate, which is approximately $300,000, may increase your timeline but are also available. 12 to 18 months for a permanent residency would be expected that route. Now, for the lifestyle, Panama City looks a lot like Miami. You've got high-rises, Starbucks, fast internet, co-working spaces, international schools. It's extremely comfortable. It's easy. You can live a very American lifestyle in Panama if you want to. The cost is a little bit more expensive than Paraguay. In Panama City, rent is about $1,000 to $2,000 per month for a decent place, depending on your preferences. Outside the city in places like Bosque del Coronado, it's about $500 to $1,200 per month, still way cheaper than most US cities. As for the tax situation, it is a pure territorial tax situation since 1956. This isn't a new program. Zero tax on foreign sourced income, even if you earn $1 million from US clients. Zero Panamanian tax. No wealth tax, no inheritance tax, and no gift tax. The newer option on the block, Paraguay, a hidden gem. Why Paraguay is incredible. It is the lowest cost option in South America for this strategy. The simplest, the fastest residency process, and essentially zero physical presence requirements. It also comes with Mercosur membership that gives you travel benefits to Argentina, Brazil, Uruguay, and Chile. And it has an only 10% tax rate on your local income should you choose to establish a business in the country. The residency path for Paraguay is quite simple. It is economic solvency. Show that you have money, you can get a temporary residency in weeks. You convert that to a permanent residency after 2 years with no physical presence requirement. You can then apply for citizenship after 3 years. The lifestyle in Paraguay is not the same as Panama. You're not getting a Miami-level infrastructure, but you are getting a genuinely warm culture, incredibly low cost of living, and honestly, peace and quiet. If you're tired of that rat race and you want to live on $1,500 a month in total, Paraguay delivers. They also have all the modern conveniences that you would expect. As for the cost, in Asuncion, the capital, budget about $300 to $600 per month for rent. Outside of the capital, $200 to $400 per month. You can live very comfortably on $2,000 per month all in. Healthcare is also surprisingly good and extremely affordable. Now, the tax situation. It is a territorial tax system. Zero tax on foreign sourced income. Even better, a 10% flat tax on Paraguayan sourced income, one of the lowest tax countries in the world. A quick mention of some alternatives. Costa Rica is gorgeous. It has the best beaches, great coffee, and a stable democracy, but it is pricier than both Panama and Paraguay. You're looking at Costa Rica being similar in price to a US city, especially in the popular expat areas. Nicaragua is the bargain option. Super cheap, beautiful, but the infrastructure is rough and political stability is not where most people prefer it to be. Uruguay offers a 10-year tax holiday, which is compelling, but the cost of living rivals Western Europe in Montevideo and Punta del Este. The bottom line for most Americans? It comes down to Panama versus Paraguay. Panama if you want comfort and familiarity, Paraguay if you want the maximum affordability and simplicity. Both deliver on these tax strategies flawlessly. Now, let's talk about mistakes that tank this strategy. Mistake number 1, failing the 330-day test. You move to Panama? Amazing. But you keep coming back to the US for just a week there, just a week here. Suddenly, it's December and you've been in the US 50 days. Your foreign earned income tax exclusion is denied. You owe your full US tax. No exceptions. Track every single day. Use a spreadsheet. Some people use apps. I don't care how you do it, but know exactly where you were and make sure that you fulfill 330 days outside of the country. Mistake number 2, not understanding the source of income rules. Panama has territorial taxation, which is great, but if you're running a Panamanian company serving Panamanian clients, guess what? That's Panamanian sourced income. You're paying Panamanian tax on that. The strategy works when your income is clearly foreign sourced. You have US clients, you are paid from a US company. or you have foreign clients paying a foreign company. Keep it clean. Mistake number 3, keeping too many US ties. Say you get your Panamanian residency, but you kept your California apartment just in case. You kept a California driver's license, you kept your car registered there, maybe even you kept your gym membership. California's Franchise Tax Board sees this and says, interesting, it looks like you still live here, and now you're going to have to fight a residency audit. Don't play games. If you're leaving, leave. Mistake number 4, not filing US taxes. Some Americans move abroad and think, I don't owe tax, so I won't file. Wrong. You must file, even if you owe 0. The foreign earned income exclusion is something that you can claim, and you claim it by filing. If you skip filing with the IRS, they will come after you with penalties. Mistake number 5, waiting too long. Residency programs change. Panama's Friendly Nation visa used to be very simple and require only a $5,000 bank deposit. Now it's much more complex. Don't delay gathering these apostille documents we discussed earlier. The best time to move was 5 years ago. The second best time is now. And remember, territorial taxation isn't some loophole the IRS doesn't know about. The Panamanian system dates back to 1956. Paraguay's has been around forever as well. The foreign earned income tax exclusion has been law since 1926. This is an established, tested, legitimate tax strategy. But it legally requires that you actually relocate, you actually live where you say you're living, and you actually break your ties with your home state. You must actually maintain the compliance. When we work with clients, we're obsessive about documentation because 3 years from now, if California comes asking questions, you need to pull out a file and show them, here's my Panama residency card dated X, here's my Panamanian bank account statement, here's my lease, here are my utility bills, here's my Panamanian driver's license, here's where I lived, and here's the proof that I lived there. I know some of you are watching this thinking, I can't move right now, the kids are in school, I have 2 more years at my job. That's fine. Start planning anyway. Start with those documents right now, even if moving is months or years away. Understand the strategy. Maybe take a scouting trip to Panama or to Paraguay. Figure out your state exit plan. That way, when you are ready to execute, you can do it immediately instead of starting from scratch. The gap between success and disaster in this strategy is the expertise. It's knowing that California has a safe harbor provision if you establish residency in another state. It's knowing that certain types of income don't qualify for a foreign earned income tax exclusion. It's knowing which countries have the easiest paths to residency. Evolution Expats exists to connect you with the information and the strategy you need. Now, let's recap. You're an American, you're stuck with citizenship-based taxation. That's not changing. But you can move to a territorial tax country, Panama, Paraguay, Costa Rica, or others, where your foreign income is taxed at 0. You can combine that with the foreign earned income tax exclusion to eliminate up to $130,000 of US federal taxes as of 2025, and that limit will increase most likely in the future years. You can properly exit your state to avoid state tax clawbacks. The result? You earn $120,000 working remotely and pay 0 income tax legally. It is not hypothetically. I do it, hundreds of my clients do it. But this requires genuine relocation, proper documentation, maintaining compliance, and expert guidance. The difference between a life-changing tax strategy and a nightmare is doing it correctly. You're a software engineer in Ohio paying 40% tax, you could be in Panama paying 0. Same work, same clients, different address, different tax bill. This is exactly what we do at Evolution Expats. We analyze your specific situation, your income type, your current state, your family situation, your timeline, and your priorities. We analyze comfort versus cost versus adventure. We match you to the right country. Maybe it's Panama, maybe it's Paraguay, maybe it's something else entirely. We give you a complete document checklist and timeline and budget. We connect you with our trusted tax attorneys who specialize in the foreign earned income tax exclusion and expat taxation. We've helped hundreds of Americans navigate this exact strategy. Book a consultation using the link in the description or grab a DIY guide if you prefer. Either way, preparation is your best friend. Before you go, check out our document hygiene playlist. It's critical for understanding apostilles, authentication, and getting your paperwork bulletproof before your move. And watch my video on why you should keep expired passports. The advice could save you an estate tax audit years down the road. And be sure to subscribe to this channel. I put out new videos every week covering changing immigration laws, new residency programs, tax updates, and real-world expat strategies. The right information makes it all possible. I'm Brad with Evolution Expats, and I'll see you in our next video.